But let's talk about the big bang M&A deals. The fact that a lot of the other smaller banks as well are abuzz post the Lakshmi Vilas Indiabulls deal. We've got Abizer Diwanji, who is a partner, national leader of financial services at EY, to talk a little bit more about the contours of this M&A deal. Good to have you on board. I just want to start off by talking about what this potential deal could mean in terms of the synergy benefit. We have, one of the parties which has a strong regional presence. What is the takeaway from you for both of the parties on the back of this deal?
No, first of all, I'm sorry I won't be able to comment on the specifics of this deal. My apologies for that. But I can tell you a few secular trends that will even imply to this particular transaction as against any other transaction. And that primarily is the fact that once NBFCs reach a particular stage, and we've seen it in the past with Gruha Finance, we've seen it with Bharat Financial, we've seen it with Capital First, they need to tend towards deposit basis. Now what is apparent from publicly available information? This particular bank has 31,000 crores worth of deposits, and deposits comes at a cost of anywhere between 4 and 6%. So if deposits are available at such a cheap rate, it really enhances the cost of funds of a NBFC company. The other thing is that given the lack of corporate lending among banks, most banks have now moved towards consumer lending, specifically in housing finance. And their cost of funds are so low that they tend to compete with the NBFCs in this market. And the NBFCs effectively are at a much higher cost of funds because generally they borrow from the banks. And for them to remain competitive in this market, it's very important for them to have a deposit base. So I call this trend as a migration to deposit bases for large structured NBFCs. And I think this is where the genesis of this transaction or any other NBFC transaction would lie.
Go back to the criteria which was at play when Indiabulls had approached RBI first. And again, we have no insider information. I'm pretty much going by what the fit and proper clause what Reserve Bank of India describes is. They believe that if a promoter is applying for finance industry, they cannot have a very large exposure to other businesses. Real estate lending has been a concern, and also in terms of asset liability mismatch, they've been very careful. Do you think for Indiabulls Housing Finance to pass the muster based on RBI fit and proper criteria, it will not be impossible, but it will be tough?
Well, it will be tough for anybody who's kind of had a real estate business in the past. But if you look at it, most NBFCs, including Indiabulls, have over time migrated out of core NBFC activities. And at the time when these people applied for these banking licenses, they had core NBFCs like broking businesses or real estate businesses which were very active. And over time they have moved out of those broking and real estate businesses, which in RBI's mind is taboo, to more finance related businesses. So housing finance business that way is not a real estate business in a sense. So I think the fit and proper criteria is applied to financial services businesses. I don't think there will be too much of an issue. The other, and because of the past trends that we have seen, the other issue also is the fact that I think it's the compulsion of the R, and we've seen it in the private sector, and I hope to see it in the public sector. But the compulsion of the R is this level of consolidation where the large NBFCs and banks actually merge to create a platform which is going to be more resilient. So, and I think RBI of late has been fairly amenable. We've seen the CS deal also that's happened, the Catholic Syrian Bank deal. So we've seen many such transactions that have happened, and I think this is the kind of a secular trend which I think the RBI will continue.
You see will continue, Abizer. So do you, on the back of this, given the fact of all the deal synergies that we've spoken about, see more such big deals, particularly for regional banks, taking place?
I personally think so. I mean, you mentioned regional banks. I would love to, though ambitious, I would love to see it in PSU banks, because I think the franchises do exist, and there will be a lot more NBFCs who can do a much better job of using those franchises, because this migration to deposit base will happen. We have a deposit base sitting with the PSU banks, some of which, and of course other private sector banks, most of which have not been run the way they should have been run. And I think the way retail needs to be run is a very different ball game from just leaning out wholesale credit. So I particularly think if you look at the small southern banks, for example, they are quite vulnerable to open to ownership changes. And some of these banks need to be run a little better. Same could apply with some of the PCA banks. I would not ambitiously go ahead to say that should we do national cooperative bank reorganizations with the same spirit as we can do with banks, simply because cooperative banks are much more embedded in the local structures and hence very difficult to change. They need to transition to a bank first and then a merger. But I do think that the lines between NBFCs and banks, especially the larger NBFCs and the weaker banks, will blur quite a bit.
Abizer, we were chatting with Sandeep Parekh as well earlier in the day about this, as to what has really changed from this time to previously, when again Indiabulls' request of becoming a bank was shunned by the Reserve Bank. And why now? Do you even think that there is any merit that this deal would get the RBI okay at a time when there have been damning reports of Banga being included in Panama Papers?
So I don't know on the personal, on individual things as to what would happen, what would not happen. But if you talk about the change in thinking, I think it's about time we do not stick to the fact that why those licenses were not granted at that point in time. Let me also tell you that at that point in time when people applied for universal banking licenses, only 2 licenses were given at the end of the day. There was Bandhan and there was IDFC. It is not that the others were rejected. It could well be the case that RBI only wanted to give 2 licenses at that point in time. And by the way, it's currently an on-tap process anyway. So I think that as and when there is a need in the system for there to be a bank, there is a commercial case. Now, on the personal cases, frankly, you guys are better judges of whether people would get approvals or no. But I personally think that on the business case, there is a clear need for a shift in stand that the RBI needs to have, of course on a selective basis given fit and proper.
It's not Lakshmi Vilas Bank. If I look at the tone of where NBFCs are moving, either they're desperate to become bank or they know that they need to reboot themselves to get a permanent source of low-cost capital. Because IDFC Bank was acquired, Bandhan Bank had a RBI issue in terms of promoter holding. Bharat Finance was acquired by IndusInd Bank about 2 years ago, and now the latest one is Lakshmi Vilas Bank. Do you think this is the way forward where most of the NBFCs would end up becoming bank?
No, not necessarily all the NBFCs, because I do believe NBFCs have a particular niche that they cater to at times. However, what will happen is that for the larger NBFCs who have reached a particular level of growth, and beyond that growth, there is a competitive pressure coming in from the banks. Those are the ones who will want to migrate to deposit basis. The other thing is that increasingly, if you notice, most banks are trying to increase their retail presence. Everybody is into consumer banking, everybody is into digital banking, and the NBFCs are obviously doing the same. Their ability to compete for good credit will be frustrated by the fact that the cost of funds are higher. So there is a migration, or there is a business need for the larger NBFCs to move towards a migrated or cheaper cost of funds if they really want to do a larger scale credit. Otherwise, they will be restricted to the subprime market, which beyond a point is not going to be the market they can service. So I think it's a business need more than anything else. On the bank side, of course, the weaker banks are more vulnerable, which is obvious.
Pleasure chatting with you. Many thanks for joining in and giving us your view on this big M&A deal, what it could potentially mean for other players.
Pleasure.
And how you're looking at the contours of this. Hope to see you more often on the channel.